Time for the numbers. We don't need to wonder anymore, Rick.
Yes, no, we don't need to wonder anymore. Let's look at our January release of the Producer Price Index. Headline number expected to be up 0.4% is coming in hot, up 0.7. The high water mark here was in March at 1.7. The best it's been was our last look, and the last look was, down 0.5%. If we consider taking away food and energy, it's still hot, up 0.5%, hotter than expected. High water mark here, 1.3 in March of 22. We strip out food, energy, and trade, up 0.6, triple the expectations, and the high water mark there also in March of last year, 1.0. If we look at year over year, 6% on headline. We were looking for 5.4. Sequentially, it does follow 6.2, so it is lower. High water mark there was 11.7. That was in March. So 6.2 now down to 6.0. That is the lowest year over year since the high water mark. If we strip out food and energy year over year, it's 5.4%. And that high water mark there was 9.7 in March of last year, and 5.4 is the low since the high in March of last year. And finally, the last year-over-year number, this is ex-food, ex-energy, and ex-trade, 4.5, expecting 4%. So all these numbers are hotter than expectations. But in the rearview mirror, it follows 4.6. which is the lowest since the high water mark in March of last year, which was 7.1. Now, if we look at housing starts, 1,309,000 seasonally adjusted annualized units. This sequentially follows a slightly revised 1.371 million. And on the permit side, expecting 1,350,000, a little bit light, 1,339,000 seasonally adjusted annualized units, sequentially very close to last month's 1,337,000. And if we want to put a percentage on these, housing starts headline is down a little over 4%. Permits is actually highly close to unchanged. Call it up a smidge. Initial jobless claims, 194,000. 194,000. That follows 195,000. 183,000 was where we finished January. That was lowest since April of 22. Just to give you a flavor there. Continuing claims, 1,696,000, almost exactly on top of expectations. Sequentially, that follows 1,680,000. The fact is, under 1.7 is the way I would look at it. That's the easy way to tell. Last time we were over it was mid-December of last year. And finally, we now have 6 negative signs in a row with respect to our February read on Philly Fed business outlook. So 6 months in a row with negative signs. This one is minus 24.3, minus 24.3. That is the worst level going all the way back to May of 2020 when it was minus 43.2. So if we look at interest rates, we know with the hotter than expected PPI, rates moved up, basically testing yesterday's highs, which are 382. Pre-opening equities, we see the Dow futures tipping down just a little bit, hovering around 34,000, just above. If there's something important to say here, here's the way I would interpret it. Okay, the month-over-month numbers, like yesterday, were hot. The year-over-year numbers were hotter than expected, but they were still the lowest since cycle highs in March of 22, and I think that there needs to be a balance there. And if we trade above 382, yesterday's high yield, and we close above it, I really don't see how we're not going to test 4%. So close today will be critical. Joe, back to you. A lot of numbers. Sorry, it was such a long presentation, but we want viewers to know all the complexities that go with this data.
I heard you a couple of times that go back to those March. What year was that? I mean, those. When we heard those, did we know how hot those were? That's unbelievable, Rick. And these are the lowest in comparison to those peak numbers that we saw. But as you point out, expectations are everything, and we were hoping for better news, and we didn't get it. But on when you look at the big picture, the trend is continuing.